So how do you use technical analysis to profit in the stock market consistently, right? So for those of you who are new, there are two schools of thought. One of it is called fundamental analysis, whereby you look at what we call the income statements, the balance sheet, the financial statements and all that, right? But we have another school of thought that is called the technical analysis, or in short it's called TA, whereby you look at the chart itself, you look at the price of a stock, the candlestick, the chart patterns, and it's a more direct approach as to when to get in on the stock, alright, and even if a stock is good to buy in the first place. So my forte is mainly into technical analysis for those of you who have been following me for a while, alright, but it doesn't mean that fundamental analysis is not good, right? It is still useful. I mean, if the stock is strong fundamentally and technically, alright, you are able to time your entry even better. It looks good on the chart, you are able to get better entry in terms of the reward to risk. It is even better. So I would say that both fundamental analysis and technical analysis are both good. If you combine both of them, it is harder to be wrong, right? So in this video, guys, I'll be sharing with you guys what we call this technical analysis strategy that I've been using for more than 10 years now, and I'll share with you guys like two Singapore stocks whereby I caught for it a couple of months back, and it's still starting to push up. In fact, there could still be more upside, and how I've applied this technical analysis, this strategy, right, whereby it allows us to get in, to ride on stocks, to ride more upside, and when to get out as well. So watch this video all the way to the end if you want to know how you can use this strategy just by looking at the charts on two Singapore stocks, right, maybe in April 2024, and how you could position yourself in them as well, what has happened, and how this strategy actually can be applied to any single stock. So let's take a look at this stock whereby I applied this strategy, all right, about 3 weeks back, and this stock is called BumitamaAgri. So later we look at the stocks, I mean in terms of where we are right now, but this was about 3 weeks back whereby some upside targets were drawn right over here. We kind of like broke that 65 level. There are some upside targets to 70 cents and then all the way to about 80 cents, about 6% plus another 13%. So about 20%. Just about 3 weeks back, we kind of drew these targets because we expect more upside to happen, right, based on this strategy that I'm using. And of course, a note was sent out to clients as well right over here, whereby on WhatsApp, we sent out a note. You can see over here on the 22nd of March, you can see that BumitamaAgri, alright, yes, breached the key 0.65 resistance. It has consolidated below since June 2022. A couple of touches sell down, and there are signs of the uptrend continuing further. So that's the reason why upside targets were drawn. A note was sent out to our clients in Philips Securities as well. So let's take a look at where we are right now for this stock and how I actually applied this strategy. Right, just by looking at the charts, how did I even know that there could be more upside, and what do we want to do when we spot certain moves or certain price actions like this? Okay, so this is BumitamaAgri right now, and today is like the 12th of April, right? 12th of April today, all right, and you can see that we have kind of pushed up towards our second target. So we've breached our first target at about 70 cents right over here. We are now heading towards our second target at about 80 cents. The price now is at about 0.785, right? So it's gone up by, I would say, more than about 20-21%, all right? So that's not the point. The point is that how did we even know that it can go up? How did I even draw targets before this starts to play out over the past 3 weeks? So let's talk about this strategy right now, right? And you can see that for this stock, right, we have been trading below this very key level, right? This is what I call a very key resistance level. So when we talk about technical analysis, we want to gauge what we call very key price level, whereby there are a lot of sellers over there. This is what we call a resistance level. So this red line that I've drawn, 3 weeks back before even push up, we were right over here, something like that, right? Just about 3 weeks back, and I have really drawn this red line, which is a resistance level whereby over the past 2 years, right, we have touched it many times and came back. Now look at this, right? We kind of like hit it there, sort of again. It was actually the support level. As you can see, it was kind of like a support level in 2022. We broke down, and this support actually became the resistance, right? Same thing, we went down, came back up, neared it, came back down again, all right? Traded up, came back down. Same thing over here. We hit it there. There's some selling pressure. We sold down again. We sold down. We sold down. We sold down. So we have been selling down from this 65 cents resistance level over the past 2 years, many times, 1, 2, 3, 4, 5, 6 times, and we just couldn't get above this key resistance level. So when you're using technical analysis, first of all, I mean, apart from the trend and all that, you want to be able to know how to draw horizontal support and resistance level. So what is the support? Well, a support will be the other way, whereby it's at the bottom of prices. So we might have seen a bit of support right over here, and that would be kind of where it has rebounded over the past 2 years. So as you can see right here, rebounded. So it has just been moving up and down from 52 cents, 55 cents, to that 65 cents. That has been the range. That has been the range. So one of the ways to profit from stocks would be to trade the range as well. That means if a stock has been moving sideways for like 5 months, 1 year, 2 years, right, it's up and down, you can kind of get in this range, right? Try to get in maybe near the support level, near like 52 cents, 50 cents, wait for a rebound, maybe go up to 65 and you sell, and you go up and down, you just buy and sell, buy and sell. You can trade what we call the range of a stock that is moving sideways like this stock pretty much over the past 2 years. So that's the kind of like the easy way where you can trade the range. Of course, you want to have a plan as well to get out. If like maybe the support to break down, we may see selling, that's where you want to get out as well. All right. And the next way would be to wait for a clear break, all right, a clear breach of this resistance level like we had, all right, just about 3 weeks back, as I mentioned right over here. Finally, you can see that we managed to, of course, we have set our alerts then, and it kind of like broke the 65 level. So we went to like 66, 67, 68. Our alerts were just ringing off the hook. All right, and right over here, that's where we kind of like alerted to our VIP clients in Philips Securities as well. Even some of my students and mentees as well, they were alerted as well. All right, and that was where some upside targets were drawn to about 70 cents. So why 70 cents? Let me go to draw it for you. You can see that potentially where we can hit to just by looking at the charts. We can look at past prices and see where has the support previously been. You can see right over here, that was pretty much support level we were holding above in like 2022. So that could become like the potential resistance or where we might hit to before some selling. And the next target would be somewhere around that 80 cents level right over here. That was pretty much where we were. Same thing about 2 years back, we sold off around there. So that could be like the next upside targets as well. So just by looking at the charts, right, and before it even happened, you can kind of like predict or try your best to predict where a stock could potentially head to before some selling can come back. And if you know that selling can come back around this zone, that's where you could also take some profit, take partial profit, get out a little bit, maybe wait for it to pull back and then get in again. Or you could maybe hold on to your position as well to wait to see if you can break that resistance and hit even higher. But at least you know this price level whereby selling can come back again just by looking at the charts alone, just by looking at what we call the chart using technical analysis. All right, so you can see that over the past like 3 weeks, right, we have broken this resistance level. You can see right over here, that would be the 70 cents resistance whereby we broke it, and now we are heading towards the next resistance that we have drawn. This is about 3 weeks back at around that 80 cents. So the question is, now it is 0.785, right? I think today the high is at about 0.79, all right? So will we actually see selling near that 80 cents? Well, in my opinion, I would say that, yeah, we might see selling happening. In fact, I think it's happening right now. Sellers are starting to come back to push prices a bit down. It might go to 79, 795, and sellers might come back to take some profit. Why? Because as I say, it is a psychological level. It's like 80 cents, all right, and that was where we were 2 years back. You see, we were trading below for about 2 months, and it's just started to push all the way down from 80 cents to like 52 cents, 50 cents, all right? So that is where we have seen selling previously. Potentially, we might see selling again, all right? But doesn't mean that, once it nears 80 cents, because we have seen selling previously, means, it will like, crash all the way back down because he has done that previously. It doesn't mean that. It just means that 80 cents could be a level whereby we could see some profit taking. So if you want to take some profit there, let's say you've got in at like 66, 67, like when we called for it right over here, it would be about a 21, 22% profit. I mean, you don't have to be greedy, right? You can take some profit, maybe sell half of it, sell 1/3 of it. You could take steps to protect your profits as well. So in case you were to like dip a little bit, maybe below 77 or below 76, you could have a stop loss to get out, and you still pretty much make money. All right, so that is how, just by looking at the charts, you can predict where prices can hit you. All right, so this is what we call a bit of a breakout move. You can see right over here, as I say, we broke that 65 cents. All right, so we have broken this 65 cents previously about 3 weeks back, and we were trading below it for about almost 2 years. So when we broke it, you can take a look at what we call the volume on this breakout move right over here on the like 21st, 22nd of March. Let me just take a pull out the volume. You can see right over here, when you look down, you can see that we have kind of a spiked up volume, became above average. So this blue shaded area is what we call the average volume of the stock. So if it's, the volume is like more than 2, 3, 4, 5 times, you can see volume kind of like increasing above the average over the past 2 or 3 weeks as it continues to push higher, that is a sign of strength on a positive bullish breakout move, especially if volume comes in is more than 2 or 3 or 4 times above the average as it breaks out, as it pushed above a key resistance level that has been trading below for like 2 years and finally gave way. All right, that is a sign of strength. So that's how we can look at the volume as well, all right, to look at a move whereby more upside can happen. So next thing is that we can also take a look at, apart from the support and resistance, we can also gauge the trend of a stock. So you can see for this stock, right, it has been pretty much moving sideways just by looking at the blue and red line. This is what we call the 100 days and the 200 days moving average. It's a longer term moving average, and since about 2 years back, you can see they're just like moving sideways, crossing up and down above one another, but just moving sideways. But somewhere around the beginning of the year, right over here, you can see that the 100 days moving average line, the red line, has crossed up above the blue line. So there are some signs of the uptrend actually forming, right? Not entirely clear yet because we were, as I said, we were still below that 65 cents resistance level, right? We're still below it. So we want to get a confirmation whereby there are signs or potential of the uptrend forming. But once we break that 65 cents level on volume plus, all right, the moving averages are all pointing up. Well, that could be a good confirmation, all right, of more upside. And that's the reason, as I say, why we called for it, like, 3 weeks back, and upside targets were drawn all the way to about 80 cents, right? And of course, there was a message that was sent out to our clients as well. You can see that was pretty much what happened about 3 weeks back. You can see, so we have consolidated a little bit higher, push up, and we have headed towards our 80 cents target. All right, so that is the technical analysis strategy that I use. So I caught the one good trend. There's a glimpse of it in a nutshell. So if you want to find a little bit more, guys, you can attend one of those free webinars that I'm still running. The link is right below. Click on the button to register, or the link, register for this free webinar, whereby I share with you guys the entire one good trend strategy, all right, and how we actually combine things like candlestick, patterns, price action, support and resistance, even the trend as well, and how we combine all of it together sequentially. We look at it, and how do you actually use technical analysis, right, or this strategy to guide you on entry and exit, and so to pick winning stocks as well. So the link's right below. Click on it to register for this free webinar that's about 2 hours long. Right, so let's move on to the next stock where I can share with you guys this strategy again. And this stock is none other than SamuderaShipping. All right, so just about, I would say about 2 months back, 3 months back, same thing. There were some upside targets that were drawn. You can see we were like pushing lower and lower since March last year, from 120 all the way down to about 60 cents. And somewhere over here, it seems like we have found a bottom. All right, and we have breached what we call that 65 cents resistance level. Upside targets were drawn all the way to like 80 and then 85 cents. So that was about 2 months back, and we have kind of like pushed higher. Of course, I've alerted my clients and also my students and mentees as well. All right, so let's see where we are right now and how do we actually apply this strategy. Okay, so this is SamuderaShipping, all right, one of the second Singapore stock that I like. We still like it, all right. You can perhaps put it in your watch list as well, but that's not the point, all right. The point is I'm going to share with you guys why this stock even came into our watch list, why did we like it about 2 or 3 months back, and what do we want to do going forward as well, right? So you can see that for this stock, SamuderaShipping, right, we have formed what we call lower highs. It has been a bit of a downtrend since March last year. You can see just pushing lower and lower, right, lower highs, and we can also draw what we call a downward sloping channel resistance line. So this is kind of like a red line you can see right over here, connecting the highs, right? Connecting the highs. So we can look at trends as well in terms of technical analysis. So when you form lower highs, prices is going lower and lower. You want to be careful. You don't want to buy like over here or anywhere here, because we are in a downtrend. And if it breaks a certain support level, it can just go down and down and down. I mean, just like what it has done from 120 to about like 60 cents. It's almost like half price, right? So imagine if you're just buying all the way down. So we don't want to buy a stock that is in a downtrend. We only want to think about buying when at least there are some signs of a reversal, all right, back to an uptrend, all right, or at least there's some signs of it, starting to become stronger, prices heading higher. It might be a bit more expensive, but at least it is not just going down and down and lower and lower, all right? So we don't really like to buy cheap stuff in the stock market. All right. And you can see right over here, somewhere around like December 2023, right, just end of last year or maybe beginning of the year, you can see that we finally managed to break above this downward sloping channel resistance line right over here. So that could be kind of like confirmation, right, in terms of more signs of the upwards direction and move up. And same thing, we want to draw what we call resistance lines. You can see as we broke above this this red line, or this downward sloping red line right over here, the channel resistance, we will actually still below. Okay, let me just remove this. You can see that we were actually still below, right, this horizontal resistance level. That is about that 65 cents. Same thing like BumitamaAgri seems like 65 cents is a bit of a resistance then, and we were actually trading below it for about 2 months. Look at this, swing up, down, and for about 2 months we were just below that 65 cents. So now that we have broken above the downward sloping channel resistance, plus we have broken above this resistance level at the 65 cents, and we held above that 65 cents. Well, that's where some upside targets were drawn all the way up to about that 80 cents. Let me go ahead to draw this 80 cents level. 80 cents would be what we call resistance level. Why 80 cents? Let me just draw it for you. You can see that when we draw our targets previously, so right over here, right, you can see that 80 cents, 85 cents was a resistance level targets that we can potentially hit to before some selling can happen again. So how do we know like 80 cents and 85 cents? Well, very simple. Let me just go to where we are right now. You can see that 80 cents is where we have seen selling previously. So it was a resistance level. All right, same thing. We broke above it. It became it broke this resistance, went all the way up. You can see it became a support level. We broke down, went back up, retested, came back down. Same thing. We headed to here, retested, came back down. So that is kind of like a resistance turn support, support turn resistance over the past 2 years, right? And that is a key level. So upside targets were drawn then all the way to about 80 cents first, and then next one would be maybe around that 85 cents, maybe right over here, because you can see same thing, that was where we have seen support right over here, right? Just last year from April to August, we were seeing support right around that 85 cents level. So let me just zoom it in for you. You can see right over here, of course, we broke 85. 1 week later, we broke 80 and started heading down. So this 85 cents would be where we can potentially hit. In fact, right now we have already attempted to, right now we are attempting to break this 85 cents. 80 we have breached, obviously, all right, and now it seems like we're attempting to breach that 85 cents resistance level, all right? So that is a good thing. If we can stay above that 85 cents level over the next few weeks, or next 1 week, or next few days, that would be a good thing. We could potentially hit even higher, and that's where we have new targets that can be drawn, maybe all the way up towards the psychological $1. So $1 would be a psychological level, or that's where where people like to sell as well. You can see right over here, we have sold off a bit of a support. You can see we broke down. So $1 could be the next upside targets if we can hold above that 85 cents over the next few days or next 1 or 2 weeks. So yes, we have breached our upside targets about 2 months back when we were somewhere over here. We have gone higher, but it still looks good. There could still be more upside. And in terms of the trend as well, as I say, we want to look at what we call the moving averages. So these are what we call the longer term moving average. And when we have the red line, or the 100 days moving average, crossing back above the blue line, the 200 days moving average, well, that would be good as well. That would give a bit more confirmation. It might be a bit delayed because it's a longer term trend, but that would give more confirmation that there could be more upside in terms of the upwards direction, in terms of the uptrend really forming firmer. So you can see over the next like 1 week or 2 weeks, if we continue to stay above 85, well, I would say this red line, this 100 days moving average, will continue to point up right over here. Let me just try to extrapolate right over here. And the blue line, all right, this 200 days moving average will be something like this. It might just go flat a little bit, it might start to point a bit, but right over here, as we were to see this bullish crossover, whereby the 100 days moving average red line goes above the blue line, the 200 days moving average, well, that could be another confirmation of the trend in the longer term turning up as well. So not just from the moving average, but from the price as well. If we stay above 85, well, this could be a new support level. We can turn this to green in color. Let me just remove this right over here, and you can see that targets could be all the way up to that $1. So that would be like a new support level above 85 cents, right? If we can stay above over the next 1 week or next few days. Yes, that's it, guys. So I hope that you like this video so far. You've got some golden nuggets on what to do, on how to actually use technical analysis just by looking at the chart itself, looking at the prices, maybe looking at some indicators like the moving average, support and resistance level, the trend, all right, and how you could actually predict the movement of a stock before it actually happens, just like what we have done for these two stocks. They have hit our targets and perhaps even moving higher as well. So if you want to find out a little bit more on my one good trend strategy that wraps everything up, that put everything like step by step together, attend one of those free webinars. The link is right below. And in fact, for these two stocks, we do share with VIP clients of mine in Philip Securities for free. All right, so if you're not yet a client of mine in Philip Securities and you don't get much service from your own broker, you're just pretty much logging online on your trading account and it's DIY, nobody contacts you, you get no ideas, no video, no WhatsApp, no training, nothing, or you don't even know who your broker is, all right, it's just like a DIY online mobile trading platform or app, then you might want to come on board as a client of mine in Philip Securities for free. That's where we do share some of those trade ideas like, SamuderaShipping and even BumitamaAgri for free, all right, by WhatsApp daily. You do get some of these ideas faster as well, faster than the time it takes to create a video like this, right? So the link's right below. Find out how you can become a VIP client of mine in Philip Securities for free, and you do not pay anything more. It's pretty much the same as whatever you're paying when you're trading. So you do not pay anything more and you get to enjoy some of our value-added services as well. So I hope you like this video, guys. All right, thank you so much for watching all the way to here. All right, I look forward to see you in one of the webinars. All right, and become a client of mine in Philip Securities as well if you have not yet done so. The link is right below. All right, and I look forward to see you in the next video. Take care.